All right, what's going on? Checking the sound. Right, what's okay? Sound's coming in good. Great. So let's go to what we were thinking about today for our third live stream and a particular stock that we had in mind. Very popular, very popular stock. No, it is not Tesla. We will take off this right here. We are going to be looking today at ARM Holdings, aka ARM, which is a company trading on the NASDAQ right now. And first glance, we're going to clean this up a little bit. Now you can see there's not a lot of candles on the screen here, so we're having to zoom in a little bit. This is the daily chart because ARM, interesting enough, was listed on Thursday, the 14th of September, 2023. And now it's May 7th. So, it's been on there 7.5 months or so, almost 8 months. We haven't even seen a year of price on the NASDAQ yet. And this is our daily chart we're just looking at for the moment here. Price at the moment is around 107, 108, 108.30 to be exact, as the market closed, as the New York session closed. And we shall see what happens from here. Now, looking at this chart, what am I personally looking for when I come to a chart like this? Or what am I looking for in anything when I'm just coming to do some analysis on TradingView to look at price and where it sits at relative to where it's been? Put the fundamentals of the company aside, put your other research aside, and just come to the chart and see what it's doing. Generally, I like when the two come together on a storyline, but at first glance, I always want to just look at the chart by itself without thinking about whether or not it's a great company or not. Now, I do have an interesting story about this ARM company, this stock, and I'll get that out of the way before I go into detail here on what I look for. I remember, I say this like I'm so old, but this was only like 7.5 months ago. I was at work the day this company was listed on the stock market. And it was interesting to me because I seen on at my morning job, the TV is always on in the break room, and they had it on the news, and on the news they were talking about this company and how it was listing on the stock exchange. And it just immediately, when I saw that, it just raised a big red flag to me because why are they telling the general public on traditional TV news station about this company? And, it had listed at like $70. And then it had listed that day. And then, I said, I would never, I'm not, I refuse to buy something when it first comes out. I want to see a little bit of price action before I purchase something. And in this case, it was great because, you know, it had came out listed at $70. I said, wow. And then a couple days later, I checked my phone to look back on it, and it was like 55. So it was like, ugh. See, this is an example of why it's generally a good practice not to just jump the gun on something as soon as you hear about it, especially from TV. So it had opened at 70, and then the following week it had just dropped down from 70 to the 50s, and it was just ranging in the 50s, right around this area. We can make a cute little box here. I say cute, that might be a poor choice of words. So right here, interesting enough, was when it opened, $70. And then, okay, the day it opened, it got people buying, and then the very next day, boom, it sold off. So it was a sell the news kind of deal. And then we watch as it just starts ranging anywhere from, what was its low here? 46 to 56. So between 56 and $46 per share, it just kept ranging. And it did that for, whew, maybe about 4 weeks there. A little of maybe about 5 weeks. And then, so we have this area where it's just ranging. And then peekaboo, it comes up. It broke that $56 area that it just could not get above. And then it just starts coming up. So, okay, I didn't buy it then. I didn't buy it while it was bouncing around here because I'll be honest with you, after about the fifth day of it being on the market, right around here, I just stopped paying attention to it. I wasn't interested in it. I had other things I was looking at to purchase, and this wasn't particularly on my mind. And I didn't include it on a watch list or anything, so I wasn't interested in it. And it's interesting to see how it played out. It come back up. It took a little breather over here for about a week, and then it just creeped on up. And then here, interesting enough, let's see when this happened. This was about from the 14th of December last year till about the 8th of February. That's a very interesting bit of price action right there, of it ranging between 65 and 80. Now, personally, if I had been watching this, this would have been a perfect time to potentially purchase some. Now, why are you saying that? That's just how I personally look at the marketplace. I'm not buying down here. Why? Because I'm not seeing what I'm looking for down here. It's just make another low. It's just hanging out down here. I like to see something come up and then come back down and kind of check an area it was at before and see if it likes it or not. And if it doesn't like it, it'll either continue up. If it loves it, it'll eat it, if that makes sense. So right here, this itty bitty small consolidation here for a couple weeks in October to November from, well, this is during the month of November. This was an interesting position here because, okay, we're around the 60, 65 level, but we never really came down and retested our old 56 level, did we? Well, you're going to count that itty bitty candle? What are you going to do? Are you personally going to count this tiny little candle right here? Not really. I mean, that's such a tiny little bullish hammer candle. That's so small. And by the time you've seen that, the very next morning, it had make the next leg up. So I don't, that's not really a nice test of a previous zone, so to speak. You know, that's a little too sneaky, in my opinion, of testing a demand area. But it's an interesting chart nonetheless. Now, here is where I'm getting to the juice of the story. This area from December to February, this is a sketchy range right here. I like it because it tests the previous demand area twice. I love that. I love how we'll get rid of this box here, clean it up. So as of the moment, this is our previous area of consolidation. And this is on the daily chart, mind you. So you see, oh, the daily, oh, it's going up. Oh, it's going up more without me. Oh man, I should have bought it. Now it's at $78. Dag nabbit. You might start kicking yourself because you seen it down here at 50 and you were like, ah, you were you weren't sure to buy it, you know. And it's kind of hard to tell. It's not really a lot going on over here. It's really just ranging in a small area. And then you see this breakout, and real quick, within a week, it makes another leg up. So this next leg up is where a lot of people were just like kicking themselves, you know. They were like, man, it's leaving without me. That was a terrible stick figure. So they watched the little man run away with price, and it gets up here to $78. Now, a keen trader will use the chart to his advantage and use previous price to dictate his next move. So here you see it started going away. Okay, now I know we're on an uptrend. We've broken the previous all-time high of $69. We're above that now. So now we are in a new territory. So you're in price discovery, as they say. What I love to look for is for it to come back and test a previous area that it was consolidating at and either A, fall through it, or B, bounce from it. And as we can see right here, everybody thought price was running away from them, so they started buying over here. And the market knows that. It sensed that people were getting in on it because people are buying out because they see it's at an all-time high. People love buying it. So the market said, well, let's see what we can shake out from them. And bam, it drops it down a little bit. Not much, but look where it dropped it down to. the previous consolidation area. So personally, as someone who looks at the market, I love to look for a previous test. I love to look for a test of a previous area. And interesting enough, it had tested this area previously. So we watched to wait to see what it did from there. It bounced up from there. When you saw this little bullish hammer candle, there's nothing wrong in you taking that opportunity to go ahead and take a bite of this. And if it fell below the previous consolidation area, that's okay. Because you still had this area down here that has yet to be visited again. All you can use is what you've seen in the past. So it looks like it's bouncing from here, and you might have gotten a little late. That's okay. I love getting in late. So you might have bought in around $72. Honestly, if I was purchasing this, there's no reason for me to get rid of it unless it comes below this level. Because just because I bought it here and it comes back down to here, if I bought it at 72 and it came down to the 60, well, that's still no reason to really get rid of your position, especially as an investor. It just means you got in a little too high at that moment because it might just be testing in this area again. It very well could have come down here and tested the $50 area again. It did neither of those. It consolidated, it came up a little bit, took a nice little breather here. That's a beautiful move right there where it just kind of drags diagonally to the right, just ever so slightly coming down, but not breaking any previous low. That is beauty spot right there. So we'll venture to say we got in at 70 if we were watching this like a hawk. And since we were patient and we were not emotional and we held it because it never dropped below our $50 consolidation area over here, we were rewarded by this beautiful gap up. When did this happen? The 8th of February. Beautiful move. It just made a gap from 77 to a range between, oh, it had gotten up that day all the way to 127. Wow. So in one day, it had started from 77 and ended up at 125. That is a beautiful move, albeit a gap. Personally, I don't prefer gaps, but what a beautiful move if you had bought that. But you might be telling yourself, well, that doesn't help me now. Well, that's just a story of, how you look at something as you're looking at it. And this is all hindsight, of course. So cleaning it up fresh, that was just my interesting story because I remember when this came out and I watched it for the first few days and then I just stopped watching it. And it's interesting to see it had a beautiful move up. But with this gap up that it had made in February, middle of February, it got all the way up to 164 level and then it sold off. And then it's doing this number. It's just been kind of ranging between, let's see what we're looking at here, 150 and foot 115 level. So it just kind of ranged in this area. Nice little box, up and down, up and down. No decision either way. And then, ooh, it took a drop down, another sell off. A little small indecision candle there, and then boom, another sell off. And it had recovered, if you see. Interesting enough, it's always nice to see when these gaps get recovered like that. You see that gap? Watch those gaps. Mind the gap. A lot of times these gaps, they tend to get recovered. Sometimes fully, sometimes partially. And price on the 19th of April, it had recovered the gap, about 50% of the gap. Right at 50% of the gap. That's nice. That's a telltale sign when you see that 50% gap recovered right there. That's another little insight. I've seen that happen many times. You might be expecting the gap's going to get recovered all the way. Well, it's going to do whatever it wants to do. It's going to do whatever money's there. But it's nice to see that it got a nice 50% recovery of that gap. That happens a lot where it just takes half of the gap back and then goes about. And now, after recovering half of the gap, the past, what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. The past 11 days, 12 days, it's been on a nice steady move up. Personally, this is looking good. This is looking good. $100, you might think, oh, $100, it's so high. I want to buy it down here at 50. Well, it didn't have enough history to know what was going on down here. I mean, really, nobody knew what was going to happen the first few weeks it was out. So forget about that. Go by what you see now. What I see now personally is I would enjoy to see a move like this where it's coming back up and it's testing this consolidation that it's been doing up here. I'm interested in what's going to happen here at the 115 level. Is it going to break above? If I see this nice break above, maybe a little pullback, and test this area one last time, no reason why this stock cannot jump up and make another higher high. We've not made any lower lows yet. You can kind of project this little trend here that we have going on. Isn't that funny how that works out? How did that price just so happen to be moving like that? Very interesting, no? How it just manages to follow that trend line to a T. This is what I'm watching. I'm watching this trend line. I don't care what's going on up here. I don't care what's going on down here. I'm looking at what's going on around this trend line here that I have drawn out there. So price could very well test this consolidation area. There could be a little supply to be found here. It could sell off again. Perhaps give that trend one more test to come up to 202. Or it could just do this little dancing maneuver and blah. Or price could just blah. from this point. You never know what's going to happen. All you can use is your probabilities. I would tend to stick with watching this trend line to see if it holds. And my main point of focus would be what happens when price comes back up here. Because this is where there's buying and selling going on here. And the buyers were incorrect right here because see, price dropped down and they are all negative. They were all buying at 120 to 140 and price went down to 87. You know, a lot of people got rid of their positions because they said, well, that's it. It's over. Party's over up here. It's going down now. Well, you don't know that. Don't be so quick to judge what's going on. We'll clean this up. Right now at 108, this is what I would consider to be you're in the middle of everything. You could even be starting a potential consolidation area here. Being that I'm kind of stuck in the middle at the moment, I would sit on my hands. There's nothing wrong with not doing anything. But this will be one that I'm interested in watching now. Now that it has a little bit of price to it, a little bit of history to it, you kind of have something to go back on and see what's interesting or not. And it would be beautiful to see price really come here and test this $80 area again. That would be a thing of beauty. That would give me a lot of conviction if it had bounced from here. If I see price come down here to the $80 level and then start to move up 82, 83, 84, I mean, it's got me sold right there. Because that gives a high probability of the fact that it made its initial jump up. It's had a nice retracement down. It's cooled off. Everybody calm down now. And now it's time to surprise everybody again and jump up. High likelihood of that happening if it has a nice bounce from this area. Personally, I'd be interested in using this as what they call a dollar cost averaging play for the long term. I have not done any fundamental research. I have not looked into other things that I like to look into this company, and I will the upcoming week. But it would be interesting if things check off on my list to possibly start placing my personal orders at 80, 70, 60, even 50. Don't be surprised. Don't be surprised that you see it gone all the way up to 164. Don't be surprised for it to come all the way back down to $50 again. There's nothing wrong with that. That is nice, natural price movement after having such a big move up in 4 days. 4 days going from 70 to 164. It exerted itself to the extreme. It needs to take a vacation. And that's what it's been doing, taking a nice vacation. And we'll see when it's well rested and ready to rock and roll again. So that's kind of how I look at different things. My first thing I'm interested in is what happens when if it comes up here to 120 some again, I'm very interested to see what kind of action it makes. If it's just gonna leave all the people wanting to get in down here in the dust, or if it's going to convince just a few more people to buy into it so that they can rip it down to that $50 level again. So there's a couple possibilities in mind. Personally, this is a watch and wait one. This is watching and waiting. I know it's brutal. It's brutal to sit and watch and wait and see how these things play out. And sometimes you miss the move, but sometimes you see the nice opportunity. So that's kind of how I look at things when I look at the marketplace. I look at who's making money, who's losing money. You know, here's the deal to me. All the people that were buying here 50, 60, 70, 75, it rewarded all those buyers for the first 5 months. It said, you know what? Y'all were right. It is going to go up. And it went up. And it rewarded them greatly. However, how many of these people that bought in this area, how many of them do you think actually sold their positions up here in the 140, 130, 120? How many how many you think have sold them up here? As general history of market goes, people tend to hold on to their things forever. You want to hold long term, but when money presents itself, you never go wrong by taking some off the table. Not enough people have taken their money off the table. And it the chart just it's just telling that story to me. Because there's still people wanting to buy right here and nobody's convinced yet. There's still some pretty big green candles up in this area. And then now that prices drop down to 85, it's got all these people down here kicking themselves because they didn't sell up here in the 120s and 130s. And now it's at 85, 85, 95, 105. So I bet they was sweating bullets that day when it got down to 85 because they were like, oh, I should have sold. Why didn't I sell? And now there's not as much buying going on here. Such small green candles. Very little buying going on here. Interesting enough to pull up a volume on this, but it never surprises me to see a lot of consolidating, a lot of buying down here, a big move up. A lot of people didn't sell off their stuff, and then price just revisit that same area again. So personally, that's kind of how I view the market. I look for a previous area that had a lot of action. Right here had a lot of action. Right here had a lot of action. And price right now, it's kind of in between the two. So I'm interested to see how it reacts at this area and how it reacts at this area, so to speak. So if it's kind of rejecting the 125, 130 area, that's kind of telling me a story that it might want to take another little dip down. If it drops down from here straight down, then that's telling me that there's not enough selling going on up here, and it's going to go to where the money's at, and there might be some more people interested in buying it again at 75 as it was here. So this is a classic case of no man's land, middle of the range. But look at this range here. You have your all-time low of $46 and your all-time high of $164. This is the history of this thing. So the lowest it's been is 46. The highest it's been is 164. Well, right now, you are sitting right in the middle. You're right in the middle. This is this is just personal experience. I'm not interested in things that are in the middle of a range. And this is our range right now. 46 is our low, 164 is our high. We don't know what the future holds. We don't know if it's going to go lower or higher in the future. All we have is what we have. And it was $46 in October and it was 164 in February. Right now it's May, it's 108. So I am right in the middle. Well, do you want to buy or sell from the middle? I don't want to do anything in the middle. I want to sell from the top of the range and buy from the bottom of the range, depending on what kind of maneuvers it's making. So that's kind of how I look at things on a daily time frame. Now, potentially, I would be interested in, like I said before, the $80 area, the $70 area. These are like psychological numbers on top of that. 80, 70, 60, 50. These are where my orders would be. I'm telling you right now, that's where my orders would be. My orders to buy wouldn't be up here. I wouldn't be marketing in right here. That's the middle of the range, middle of our price range. You want to buy low, sell high. I'm looking to buy down here and sell up here, 150, 140, 160, 130. I'm looking to sell up here and I'm looking to buy down here. It's that simple when you're looking at a daily chart. Now, I say that, but what happens if price would come down here? So say price comes down here 80, 70, 60, 50. Wow. You've bought all this, all this, all this, all this. You keep buying it and it keeps going lower. Well, when is your out? When is you out? You get out when you're uncomfortable. Nobody can tell you what to do in the markets. You do whatever you want to do in the markets. This is just me telling a story of how I look at things. Personally, if I see it make a lower low, 44, dip below 40, 37, I'm out. I'll take the L. I'm out. Because I do not predict the future. I don't know how low it's going to keep going. This thing can go to $1 for all I know. All I have is this line in the sand over here of this $56 to the $46 range. That's my line in the sand. If it falls below that, I'm out. I'll take the loss because the projection is for it to hold the all-time low. Now, am I going to hold, if I buy this and say it does, my orders get filled and it does make a nice move up over time the next couple years, and it's revisiting my old areas, am I going to hold it till it breaks the all-time high of 164? I was buying it at 80, 70, 60, and 50. I'm unloading it at 130, 140, 150, 160. I'm unloading it before it gets there. Because a lot of times when price makes a all-time high, it immediately sells off hard. And your order might not get filled. Or you don't know if it's going to make that all-time high. But if it's on that trajectory, don't be greedy. Take what's in the path of the trajectory. So that's kind of how I look at things like that. The best looking thing to me right now, looking at ARM, is how it recovered that gap. It recovered that gap in price action right there. It recovered it with this candle. It recovered half of that gap. That is beautiful. That is money right there. More often than not, when that happens, that's a good reversal because it met the imbalance and it's continuing on with what it's doing. There's no reason to be surprised if it makes an all-time high from here. So generally, that's how I look at things. We can zoom in a little bit before I get off here. The 4 hour and the 1 hour. So looking at the 1 hours, interesting, very interesting. Because looky here. Now, mind you, this right here, this was that gap getting recovered. So price has moved up and it's come down just a little bit, but it never went below that $86. So if I was going to take a nibble now, I would take a nibble now, and perhaps I would take a L on it if it had dipped below this $86 area. Because what that tells me is that it's going to continue to fill up the rest of that gap that's way over here that we were looking at on the daily. So taking a nibble in this area right here would be of interest to me, provided it doesn't drop below this $86 area. But this is just, it's such in the middle of the range that it just doesn't excite me, you know. You see right here, right? You see this candle right here? Look at this interesting candle right here. Right at the $115 level. This is like a ceiling, aka a resistance point. So imagine, this is like a ceiling above you. And we haven't even hit our head on the ceiling yet, and we're making a decision about where we're going to go. We're just floating in the middle of nowhere. Not interested at the moment. That's not me being negative. That's just me telling you personally how I view it. We are in the middle of the range. So, but this is definitely one I've added to my watch list, and I'll be keeping a little closer tabs on that. Interested to see what happens up here at 120. Interested to see what happens down here at 80. Could be looking to sell up here. Could be looking to buy up down here. And that's playing it very basic, in my opinion. Fundamentals aside. I hope y'all enjoyed this little video of looking at ARM holdings on the NASDAQ and my personal viewpoint on it. And I will talk to everybody later. We'll do our happy face dance.